What a wild week in the stock market, and a lot of it was focused on the so-called AI bubble that is picking up steam when it comes to investors. And at the center of all of that was Nvidia this week, who released their earnings and continues to gain in popularity, being the center of attention when it comes to AI, and rightfully so, as they are the largest company touching a $5 trillion market cap at one point this month. However, even though the company reported fantastic results, the stock still fell off, and the market saw huge volatility this week. So right now we have to ask ourselves, as investors, one of the most widely owned stocks that's out there, is it time to take profits and sell Nvidia, or should we be buying more? And that's going to be the sole focus of today's video. But before we begin, do me a huge favor, show your appreciation for these videos by just simply clicking that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And when it comes to investing, my number one resource is undoubtedly fiscal AI. Whether I'm looking to analyze the health of a company's balance sheet or look at a number of different valuation metrics, fiscal AI has it all. This is a one-stop shop that if you want to take your investing to the next level and generate better returns, this is a resource that every investor should have. And right now, you could get 15% off any of their paid subscriptions, and that's after a free trial. So head down there after today's video and check out Fiscal AI today. All right, let's jump back into our video talking about Nvidia and whether it's time to buy, sell, or hold. Are we in an AI bubble? And before we begin, let me know your thoughts at the beginning of this video down in the comment section. How do you rate shares of Nvidia right now? A buy, sell, or hold? And jumping back here, and again, you're going to see content throughout this video all garnered from Fiscal AI. This is their standard overview page, regardless of which stock you're looking at. And as you can see, when it comes to Nvidia, they currently have a market cap of $4.4 trillion, although they did recently touch $5 trillion at one point. And as you can see here from this chart, Nvidia shares have climbed an impressive 1,280% over the past 5 years, making a lot of people a lot of money. But how does that compare to some other high-flying stocks? Well, looking here, this chart I created again from Fiscal AI, I'm comparing that of Nvidia to that of Palantir, AMD, Broadcom, and the S&P 500, all looking at their returns over the past 5 years. We could see Broadcom up an impressive 805%, Palantir 760%, AMD nearly 150%, and the S&P 500 close to 85%. But none of them even come close to that of Nvidia. Nvidia has been on an incredible run, yet investors are still warming up to this idea of an AI bubble. Now, there could be certain stocks that are out there that are in a bubble-like scenario, but when it comes to Nvidia, that's what we're focusing on here today. And there's a lot more big-time legendary investors and a lot of the media that's really cooping up a lot of this AI bubble talk. Now, here in a second, I'm going to show you a quick clip from legendary investor Ray Dalio. But when these people talk, the Ray Dalios of the world, the Jamie Dimons of the world, take it with a grain of salt. Some of these guys are perma-bears, it seems like. This is a man that, although is worth a lot of money, when speaking, he's a huge pessimist, not just today, but dating back years. And here's just a few of those recent market calls, looking for the demise of the stock market. In April 25, he was looking for a 1930s-like trouble in which the global markets were punished. In June of 2025, Dalio predicted a new financial crisis again. And in this article, they go into his track record, or lack thereof, from Dalio, making these dire predictions time and time again. And here are some of those predictions in a chart. And as you could see, all of them were at terrible times. Sure, we're all going to make errors, and we're never going to bat 1,000. But when you make these calls time and time and time again, and you're constantly wrong, sure, if you make them enough, you're probably going to be correct once in a while. Now, again, I don't want to completely discredit him because he's obviously made a lot of money over the years. But at the same time, as investors, retail investors, we need to sometimes take a step back and see who is talking. Is there business purpose behind them? This is an individual that runs a massive hedge fund. He's looking for accredited dollars. And if there's fear in the market, some investors may say, well, I probably can't do this on my own. I should probably hand this over to a so-called professional. So it's going to make you think twice. But now let's get to that clip on Ray Dalio in the media this week talking about the AI bubble.
Bridgewater founder Ray Dalio is with us. Good morning to you, sir.
Good morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at Nvidia this morning, and I think a lot of people are waking up thinking, where's the market headed next, has been this question of an AI bubble. And I'm curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in the markets. Bubbles, what is a bubble? Right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion. Or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money? So it's a matter of who the buyers and sellers are.
So one of the takeaways that I took from that standpoint is, number one, he's not very good on camera. But number two, it almost sounds like someone that doesn't have a lot of conviction in what they're saying. And also someone that may have missed out on an opportunity. As you can see here, Ray Dalio and Bridgewater, what did they do in the latest quarter? They sold 5 million shares of Nvidia. Now, we don't know the exact day they sold, but we do know it was during the Q3 period, the end of June through the end of September. So during that period, shares of Nvidia grew by 40%, and I can pretty much guarantee you that they did not sell on the final day of the third quarter and accrue all of those 40% gains. Now, let's just say they sold them in the middle. Well, they still missed out on a 10+% gain through the end of that quarter. And then they missed out on another 10% gain into the beginning of November. So now when you replay that clip in your head, it kind of makes you wonder, is this someone that's maybe looking for this stock to fall a little more so that they can reload their shares once again? So it's important to take some of these folks, the Ray Dalios, the Jamie Dimons of the world, take it with a grain of salt. But now let's turn our attention away from them and talk more about the so-called AI bubble and the comparisons it gets to that of Cisco during the dot-com bubble. We'll take a look at both Cisco and Nvidia side by side. So let's begin first with the sales trajectory of actual sales. And looking here at this chart, you can see that nice consistent growth from that of Cisco during that period back in the day. But a completely different picture you see from Nvidia. And looking here now is a comparison of valuation I found that represents Cisco at the peak of the dot-com bubble compared to Nvidia just 2 years ago. Cisco had a price to sales of nearly 39 times and a PE ratio well over 200. And if comparing Cisco to Palantir, well, maybe that would be a closer comparison because Nvidia, from a valuation perspective, does not look like it's in a bubble. Here's a look at Fiscal AI and a chart I put together for Nvidia today, looking at both their forward price to sales in blue and their forward PE multiple in green. The forward price to sales sits at just 14.7 times, which is well below their 5-year average of 16.3 times. Again, Cisco was at 39 times. On a forward PE multiple, Nvidia sits at just 25.7 times. That again, well below their 5-year average of 38.3. And again, Cisco was over 200 times their PE. Nvidia is a company that has backed up these amazing share price results with actual results. In fact, if you look at the financials, as well and as amazing as the share price appreciation has been, the actual earnings are growing even faster, which is why the multiple has remained so low. Looking here at analyst estimates, again, these are derived from Fiscal AI, you can see that they are expecting, on average, EPS of $7.41 per share next year, which equates to 58% year-over-year growth. We are talking about a stock with a PEG ratio well below 1. Those estimates could be off a great deal and the stock still would look reasonable. Some of you are probably going to say, well, moving forward again, those are going to be a lot of estimates. They've entered into some of these deals They just haven't yet been paid. So it's a lot of promises that maybe not come to fruition. But this is a story that we have constantly heard when it comes to Nvidia. And a way to see if it's coming to fruition is not just sales, but more importantly, is cash flow. You can't fake cash coming in the door. So taking a look here at this chart I derived again from Fiscal AI, you could see the green boxes refer to the cash the company has received just from operation. The blue boxes is free cash flow, which takes into account the company's CapEx or their reinvestment back into the business. Free cash flow and operating cash flows are growing off the chart, which is what allows them to make all of these alternative investments. So with that, speaking of those alternative investments, that gets us to the so-called AI web. And I'm sure you have seen this image online, and this is where I do get a bit concerned. But again, not with valuations, but with this circular financing. Nvidia invests in companies, and then they take that cash and turn around and buy Nvidia chips. Now, the key difference is the fact that Nvidia has cash, and the companies are purchasing the chips. Going back to the dot-com comparison, Cisco in 2000 saw revenues grow an impressive 56%. However, accounts receivable grew by 84%. This is definitely not something that you want to see because it means that the company is delivering a service, delivering a product, but they're not yet getting paid on it. And in some scenarios, they may never get paid on it. But when we dive into Nvidia again, that also is not the case. As we dive into their collections through a metric coined Days Sales Outstanding, or DSO, over the past 5 years, you could see that there's been relatively no change, as they have consistently sat between 45 and 50 days. It all goes back to Nvidia is a real company with real results and huge cash flow. And they not just deliver on extended results, they over-deliver. Again, this past week, the company reported their fiscal third quarter earnings. That blew away expectations, as you can see on your screen here. EPS came in at $1.30 adjusted compared to analysts looking for $1.25, and top-line revenues came in at $57 billion. Analysts were looking for $54.9 billion. But again, that wasn't just it. Not only did they have stronger than expected earnings and revenue, their forward guidance outpaced analyst expectations as well, as they're guiding towards $65 billion in sales for the current quarter they're in now. Analysts, in terms of top-line revenue, were looking for just $61.6 billion. And again, I shouldn't just say just. This AI bubble talk continues to follow Nvidia, and rightfully so. They are at the center of this AI boom that we're going through. But this is a real company with real results that are outpacing even the highest projections. Now, if you said, are there companies out there in a bit of an AI bubble? I would say yes. If you were looking at companies that don't really have any earnings, very little in sales growth, and all of the trade is really on speculation, and these are companies that are trading at extreme valuations, those are bubble-like stocks. Nvidia is not an AI bubble stock. In fact, you could look at Nvidia, in all honesty, as one of the cheapest growth stocks on the market today. And it's one that's in my portfolio and one I'm continuing to look to buy on this pullback. And if you're interested in seeing all of my positions and seeing any of my option trades that I make on a weekly basis, then consider subscribing to the Stock Investor's Edge. That's my personal newsletter. And right now we have our biggest sale of the year, our Black Friday sale that gets you 30% off any of our subscriptions. You could check out that link down in the description below. That sale is coming to an end. So now getting back to Nvidia, you can see on this chart here where shares of Nvidia have pulled back 16% from recent highs, putting them almost in a full bear market of their own, but firmly in a correction. And for those of you with a little exposure, knowing the risks ahead, this could be a great area to buy. Levels to watch here is the 100-day moving average, which currently sits at 180, and then below that is the 200-day moving average, which is down at $152. So if you wanted to be patient and maybe not enter right now, given the market volatility that we've been seeing, you could look at this from an options standpoint and maybe look to sell a cash secured put, generate income, and potentially get the opportunity to buy a stock that you want to buy at a much lower price. So if you want to be conservative, you could go down towards that 200-day moving average we looked at a second ago and sell the December 19th 150 put, which would generate you $215 in premium per contract and put you in line to buy shares of Nvidia if they fall down to that 150 or lower level by expiration. Now, if you want to move the strike up and be a little bit more aggressive, you could look at the 160 price point, which would generate you $370 per contract. So 2 different ways to approach this from an option standpoint. But again, getting back to my thoughts when it comes to Nvidia, I definitely do not think this is a stock that we should be selling. If anything, this is one that we would be buying, and one that I added more to my portfolio during this past week alone. And again, you can check out all of my trade alerts if you are a subscriber to the Stock Investor's Edge. So again, before we end this video, again, thanks for watching. Let me know down in the comments, how do you rate shares of Nvidia if you haven't done so yet? Do you rate them a buy, a sell, or a hold? So thanks again for watching. If you haven't done so and found any value from this video, just do me a huge favor and click that like button down below. I truly appreciate it. Really helps with the growth of this channel, and we'll see you in the next one. Take care.